Hi, everyone. It's Brian Seidensticker here at Taxel Resources. I wanted to talk to you today a bit about AVMs because we've gotten a lot of questions recently about what the heck AVM is all about. So let's start with what AVM means. It's the automated valuation model, and basically it's smart AI, if you want to call it that, that goes out and looks at MLS information and says, here's based on what the market says, here's what we think that value is. Not to be confused with county market, right? So the county provides one or both market value or values. One is assessed value and the other one is market value. And quite frankly, a lot of times they're the same, and a lot of times they're not. Exactly why they're different. Typically, assessed value is a percentage of market value, but why some are the same and some are not, it just depends, one county to the next. But anyway, this is the county market value. Now, where AVMs come in is market values. County market values can be a year or more behind, and that could be a good thing or a bad thing, right? Depending on what the market's doing. And just using Florida as an example, right, with market values a year behind, the market value should theoretically be true market value should be much higher than this value. So anyway, to get that information, you click on the button. It does take a little bit to go out and gather that. So I prepped one here that we can look at and just show you the difference. So here's what the here's what the AVM brought back, right? A low of 292, a high of 446, right? And it's good to know kind of the range, the real value that you could sell it for somewhere in the middle. The closer those are together, obviously the more accurate the model is. But let's just look at that compared to county. The county says we're 271. AVM says we're 292 to 446, right? So, if you go to the auction and you assume, hey, I'm going to bid, I can't go higher than what the total market value is, the county says, right? Chances are you might get blown away, depending on what end of this AVM range it might be in. But the truth is, it's probably worth at least 20K more than what the county says it's worth. It might be 200K more, right? So that's where doing more due diligence comes in. Now, this is the basic information, but you click on here, it gets really cool because you can see what that model is actually based on. Here's the current listings in red. Here's the recent sales. And so it's basically crunching all of that data, boiling it down to a price per square foot. And then, whatever the price per square foot is on the subject property, it'll tell you what it thinks it's worth. Now you can zoom out here and see, okay, here's the subject property in yellow, all of the recent sales in blue, all of the current listings in red. And you can see, at least in this case, the comps are pretty good. They're all roughly in the same neighborhood. Anyhow, I wanted to show that to you. Good luck with all your investment, and we'll talk to you soon.